So there's a habit that almost every trader has that hinders them from being consistent. Even me, I had it when I was still starting my trading. It doesn't matter the type of strategy that you're trading with or method of trading that you're doing. As long as you're still doing what I'm going to show you, being consistent is going to be very far from you. And majority of traders do it, right? So watch until the end so that you can stop doing it. Of course, I'm going to do analysis. And I show you what you should stop doing, and then you'll see consistency coming closer and closer, right? Or even it may be the only thing hindering you. Are we together? So without wasting time, I'm going to use volatility 10 and volatility 100 so that I can show you what I would like you to stop doing, and maybe also ways how to get around it. Are we together? So starting from the monthly time frame as usual, we're going to start by getting our direction. If you observe, the market has broken above this area here and retested it. Now, of course, not everything that I've been sharing are due to time, right? I don't post everything, but we already looked at this push up and a retest to this area here. Those I've been interacting with know that we took a sell from up here to down, then we expected the market to continue higher, right? But this is a very basic movement that anyone could see. You can see this is a inverse head and shoulders, a basic structures that anyone is aware of, right? So now that we have retested this area, which area are we looking at the market pushing to? Personally, I'm looking at the market pushing into this area here of supply, because we have a hidden area of supply in this area here. Also, we have this impulse correction and correcting into this structure here, and we expect the market to push up. So now when you go to the weekly time frame, what do we observe? Now, when you come to the weekly time frame here, I'm just going to adjust this slab so it's not so big. I'm just going to adjust it like this. When we come to the weekly time frame, we also had a structure here that you can see it was aligning with this area that we marked in the monthly time frame. That gave us that area of demand, right? So now currently, we spoke about also the loss of momentum, the weak momentum in monthly, which is clearly reflecting in the weekly time frame. You can clearly observe here. If you want, you can use a counter trend line. Those who use trend lines, I'm not a big fan of trend lines, but you can see we have this counter trend line here. And currently we are breaking above. But also we can add in some levels that we can be using for scaling in case we didn't take the trade from down there. Where can we take our trades from, or where can we add trades from, right? So we have this area here, and also we have this area here. So currently the market is breaking above this area here, and we shall expect the market to retest before going to the area that we want the price to reach. Let's check if daily also agrees. Now, when you come to the daily time frame, of course, you can adjust this, right? So when you come to daily time frame, we clearly observe also the market touched into our area that we marked in the monthly time frame. Impulse, you can see we had an impulse here, depending on the time frame that you use to trade. Intraday, remember we said use daily, and if you want to hold for a long time, use the weekly time frame. So daily gave us a W plus an impulse, corrected nicely. I spoke about this to those people I've taught privately, so now we are pushing higher. Now, what are we interested in case you're not into this trade? We're interested, we have already marked this area. We're interested in the price breaking this area here. So if price can take out this area, right, then we shall expect the market to come, the price to come and retest this area, and then our target will be this one here. Remember, this is a daily time frame, so the distance may look small, but it's a very big distance, and also we have a good number of pips here. Now, let's go to the aspect that I want to show you. Now, after what the habit most traders have is that it doesn't matter the type of trading, the method you're using, whether you're using smart money, whether you're using market structure, whether you're using supply and demand, whether you're using support and resistance, it doesn't matter. What traders normally do, also personally as a victim, is after marking an area like this, and I come to my entry time frame. Let's say we're waiting for the market to break this area, right? If the market breaks, the rule of break and retest is the market should break aggressively and comes back with a weak momentum to retest here. Now, the moment the price touches this area, we start putting in our orders of buys. Now, you should stop doing that. If you don't stop that, believe me, you will never, ever be consistent. You can make money here and there, but you'll never be consistent. By consistency, what do I mean? By consistency, I mean that if you're, of course, losses are going to be there longer, but if you're to calculate the amount of money you've made compared to you've lost at the end of the month or end of the week, depending on how you calculate your profitability, you should be profitable. Like the net should be a positive, not a negative. Now, if you don't stop doing this by just marking levels, of course, you said that I'm following rules, but I'm not making money. This could be what is holding you back. price should come into this area here. Then that's why I taught you guys about refining. I don't speak so much about it, but you need to refine. If, let's say I've marked an area in H4 and price has broken and come back into this area here. If you do not know how to identify change of trend in that particular time frame, let's say H4, we have marked this level in H4 or H1, depending on the time frame you've marked it in, you need to refine it. By refining, you need to go to the next smaller time frame, that or the time frame that we use for refining. For example, if you're doing intraday, our entry time frame for intraday is H1. Then we refine in minute 30 or minute 15. So if you're using if you're swinging, your entry is H4, but you can refine in H1. Are we together? So if you've marked your entry level in H4, you want to swing, and you don't know how to, or the change of trend is not clear to you in H4, switch to H1 and identify change of trend. These levels are just telling us that this area here is our area of interest or our area of entry. It doesn't mean that you should take trade immediately price touches that level. We're getting it. It's just like when you're traveling to a certain place. Let's say you're going to let's say you're traveling to Zanzibar. Now in Zanzibar, there's a particular place you're going to go to. Maybe there's a particular beach you want to visit. There's a particular historical site you want to visit. Are you together? So you'll say that you're going to Zanzibar, but when you reach Zanzibar, there's a specific place that you're going to report to. Are you together? Now, for example, we want to buy this. So when the market breaks and comes back into this area, I want to buy it, right? But there's a particular rule that, or there's a particular reason that I need to look out for into this area before I can buy. Because if that doesn't happen, the market may continue being bearish. Remember, when the market breaks above here and starts coming down, it's also moving in a trend. Are we together? Sometimes you may not be able to see the trend in that particular time frame, but when you go to the next lower time frame, like I'm telling you to refine, you'll be able to see that there's a clear trend. Are you getting it? So make sure that when you mark levels like this, wait for the market to retest. There's a change of trend here. In case you can't see it in the particular time frame you've marked the level in, for example, we marked this in H4. If you can't see it in H4, go in H1. You'll be able to see a trend here. Wait for change of trend and you can buy up to this area here. So those who trade V10, I hope you guys can utilize this. This is the structure that we are trading. If you missed it from down here, from here you missed it, even this impulse correction, you missed it. So now we can wait for the market to break above here on a weekly test. When it touches that, do not just start buying immediately. Let it give you a change of trend here, then you can push with it up to here. When it breaks here again, retest, change of trend, you can refine it in case you can see that particular time frame, then you push with it up to the levels that we marked higher, right? Of course, we have other levels that also we marked up here. This is our target, ultimate target, because there's a hidden area of supply there. Now, let's do the same thing on V100. Now, V100, we spoke about it. Those who have been following us, we spoke about it when it was still up here. It pushed down. We again spoke about it when it's making this retracement and we said we wanted to continue with it down. Also spoke about it around here when I wanted it to push and continue and finish a certain move. Now, our target was this area here, but the market went a little bit beyond this area. We wanted the market to come and test this area because of this false breakout. Here, the market was acting as a resistance, pushed down, broke up, came again, broke down, broke up. Remember, it's not tested, making it a false breakout. So we wanted price to come and stop here, and then we look for change of trend to start buying. Right? But of course, the market slightly went beyond and there was no change of trend for us. So let's try to mark out our areas. We have this impulse downwards here. So just mark it like this. We're mapping out our areas that we want price to go to when it changes trend perfectly or properly. So we have this first one. Of course, you can mark others also. We have that one. Then also we do have this area here. This tail here, we have a supply zone around this area. I'm just going to mark it properly shortly. Then also, let me just stop there for now. Now, when you go to the weekly time frame, excuse me, when you go to the weekly time frame, this is the area that we do have. We have this area here and this area here. Now, what do we see in weekly? In weekly, we see that the market was clearly making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now, this area here was not previously tested. So the market came into this area, tested this tail here, and then made a higher low and pushed higher. But the market can easily come back down because this is a resistance area. So we have made a W, yes. So what do we expect? The market should give us at least a slight pullback, and then we can continue higher. right? Now, let's go to daily. Maybe you'll be able to see it clearer. Now, in daily, also you can clearly observe that we did have the market making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. We came and tested this area. Then the market broke above, meaning that we actually changed trend to start buying into this area here. So currently the price has reached here, but along the way, let's identify the area that the market did not test properly. So I'm just going to mark using my slabs. The first one that I do identify is this one here. The market broke this area here. Was it tested? Yes, the market came and tested it. So after here, which one was next? The next area the market broke was this one here. So the question is, was it tested? Yes, the market broke and came and tested it. Now, we do have another area that the market broke, but was not tested. Which one is that? This is the area. Do you guys observe this? Some of you can call it an order block, or some of you can be saying that there's liquidity here because of this, but simply it is a level that the market did not test, and we need the price to come and test. So you can clearly see how it's aligning perfectly with what we saw in monthly and weekly. We need at least the market to give us a pullback before, if it can break above here, then we shall have changed a trend completely. Then we start pushing higher highs and higher lows, higher highs and higher lows. But as a trader, since we're doing retail trading, and most of us do not have that very, very big capital, right, to hold on to all the ups and downs of the market, we need to find proper levels of taking our trades. So if you trade V100, wait for the market to give you a pullback into this area here, and then you can trade the price up to here. When it breaks this area and then comes back, identify again untested demand level, then you can wait for the price to come back and then you take your trade. Now, again, let's try to put into perspective what I've just told you. You can see we have marked our level like this, right? We have identified our demand zone or untested level. We want price to come back here. So what are we waiting for? We're waiting for the market to change trend. Of course, we're having this triple touch here. Also, we have something like a pattern like this. So we're waiting for the price to change trend. There's a demand area here that the market needs to be breaking below. On a retest, then you can sell up to here. Though when the market has changed trend to start buying or to start selling, I don't advise you go against the trend. So it's better you wait for the price to come down here, then we can start looking for buying opportunities. Now, the mistake that again most people will make is when price immediately comes into this level here, we shall start looking for buys. Do not do that. It's what I'm speaking about today. Stop just taking trades because it has touched into your area. You're not the market maker, or you're not the one who changes direction of prices that you know exactly it's going to turn from here, right? Even if you have a lot of experience and you've done something over and over and over and over. Of course, we have two types of traders. We have the high risk taking traders and those who play it a bit safe, right? So since you're not yet consistent, unless you're already consistent and you have your rules that you follow, but since you're not yet consistent and you're just on your way there, right? I'm just assuming you're on your way there. Unless you're consistent, you can do that. Of course, there are certain things you now know you're looking out for. But if you're not, when the market touches this area here and you cannot clearly identify change of trend in that particular time frame, make sure you shift to a smaller time frame, identify this movement downwards and wait for the market to change trend and you take your trade. Please do not want to fall for these things of sniper entry, of seeing someone has put a risk ratio of 1 to 30, 1 to 100, 1 to 200. It comes with experience, right? And also sometimes those people actually are just using replay 2 mode, right? Trading in real time is not easy unless you're just falling for the demo accounts people are showing you, right? I'm not saying all of them are showing demo accounts, but if you're really trading, you know, trading in real time requires doing something over and over. So if this has made sense to you, make sure you implement it. Try to backtest, work upon it and see. Try to take trades the moment it touches your area. You'll see that most of you are hitting stop loss. Then you're like, the trade went into my direction. As in this trade kicked me out and it went. I hear that a lot. So if you want to prevent that from continuing to happen, make sure you wait for the change of trend, right? That is it for today. I wish you guys a profitable week.